Some of these bank stocks are definitely starting to show some recovery. I'm going to look right here at Bank of America. We do have a little double bottom showing up here. I kind of like banks in this area. They are definitely have the chance to revert to the mean. This is the weakest one of them. Let's take another bank like Goldman Sachs. Similar, we put in a low after the banking information came out in March, tried to rally, came down, but now we're kind of where we were before, and the market appears strong. It does seem like Goldman has the chance probably to go move higher to 360, but not a quick bet on it. JPmorgan prices are basically near their highs. So obviously JPMorgan doesn't care or think there's a bank issue. At least investors in it don't. Finally, let's look at Charles Schwab. Let's look at Chuck. I kind of am starting to like this formation. This again was partly their the banking crisis again with Charles Schwab. Remember, they are a bank, and they're a very large company with a very large bank. And it has moved from basically about $80 a share down to now $54 a share. I feel there's a good probability that if I were to choose any of these banks, and given what I see in the markets, that this could be an opportunity for some people, and I'm trying to incorporate it into some of the Smartfolios, probably the moderate and or the conservative, because it does pay some dividend, and I think it has price appreciation similar to some oil companies. So I think that's of note. We should look at that. Another thing that's actually blown up recently is look at the cruise lines. This is Norwegian Cruise. All of a sudden, it seems to be back in play. And what I also noticed is if that's just one cruise line, let's take a look at some of the more damaged ones like CCO, Carnival Cruise Lines. And guess what? It's doing the same thing. It has literally moved up from just a couple weeks ago from under $10 a share to 15. And of course, I don't need to say that that is a 50% increase. And it's now sitting probably around 4 standard deviations above a longer term mean, which also tells me generally that would be something I would look to take some profits and see it go higher. However, in this case, the cruise lines look like a money magnet, and they are attracting investors because investors know that if we're at full employment, even with a high participation rate, people will spend money for cruises. So these are things that look interesting, and also are incorporated into some portfolios like the SPY-I. However, just keep in mind that these are just things that we watch and try to keep into some of our portfolios because they are advancing. I definitely like to look for value if possible. So that goes to that. Let's take another look at some dividend stocks. So the oils, of course, has that been the market's moving higher? Has that caused oil to back off? Let's take a look at that. So here's Exxon Mobil. So the rest of the country seems to be doing well in the markets. However, these things haven't moved much since 2023. However, they're paying 8% dividend. We're coming into the second part of the year, which means these things have already paid out 4% and gone nowhere. Great plays. That's why I definitely like red oil. And if we go back historically, you'll see the main reason to like these is if you go to some of these, the pipeline stocks that we've been looking at. Let's take a look at this. These are the same things, up huge amounts of numbers in just grinding higher. This looks like a market that has got some kind of fundamental supply, and that's fundamental supply is Joe Biden and the Democratic Party that, of course, doesn't like oil. They're green, so pipelines are not part of their future. However, I do think they're still part of the country's future, and I remain extremely bullish on these. And I like owning them because, again, they're paying just like Exxon. Exxon's less now, about 8% of their dividend, and they're up decently on the year. another, say, 10%. So I like the ownership of these. And let's look at the potential. This is the COVID back here, everybody. If you can see it, pretty big drop. There's a chance that this stock, which is at 13, can go to 24 and pay you a dividend. And this is one of the reasons we like this. And it is in the red oil portfolio, along with a couple others that look exactly the same. And here's one of them, Energy Transfer. If we go to that, it looks very similar. Even though we're at COVID, we're closer to the highs. Prior to that, I feel that this is a stock that has the ability to go to $17 to $18 a share from 12. That's a 50% increase, and also paying you, guess what? 8% dividend. Nothing wrong with that. So it's always good to be rewarded and have upside simultaneously.